All right, greetings, friends. Weston Nakamura from Across the Spread in Tokyo, Japan. The most important ticker and market and price level right now for global macro is USDJPY, dollar yen 152. Okay, that is the most important price level across global markets worldwide. I don't care if you're investing in equities. I don't care if it's gold. I don't care if it's crypto. I don't care if it's treasuries or whatever. Okay, and by the way, we might be hitting that as I record this. All right, we are at 152.20 on dollar yen. It's a little bit before 5 p.m. in Tokyo on Thursday, July 26th. So we'll see what happens. But if you're wondering why the NASDAQ is down like 3.5%, the Nikkei was down today over 3%. Looks like Euro Stoxx 50 is down 1.5%, right? And it's not just what happened over this past day, but what's been happening since July 11th. What's been happening is yen strength, okay? Yen short covering and carry trade position exiting. Okay, a carry trade is basically strategy of shorting the yen or borrowing in yen and then investing in higher yielding currencies, be they USD or Mex peso, AUD, whatever it is. All of those, the common sort of denominator is the yen. Okay, the short leg of the trade is the yen. It's the go-to. It has rates that are basically still on the floor. Okay, so those positions are often correlated with risk asset positions. And so when you have sustained yen strength, as we are currently undergoing, then you can get these spillover effects. And that's exactly what is happening. That is why I'm saying that this is the most important ticker in the world, dollar yen, 152. And I'll explain why 152. Okay. But think of it this way. The yen is the CrowdStrike of green and red blinking tickers globally. Okay. And if you don't know what I'm talking about with CrowdStrike, then A, you either weren't flying, or B, maybe you couldn't even access internet or something because of CrowdStrike. And this all falls under the framework of this piece, which is a long form, deeper dive into this shift in tactic from the Ministry of Finance and how they execute their Yenterventions. They used to be reactionary and defensive, and now they're being proactively offensive. Okay. And so I will get into all that in depth on my Substack. So please check that out. In the meantime, however, I need to flag this live market situation. So let me just run through a couple of charts to show you what it is that I'm talking about. All right, folks. Sorry, I had to take a little pause there because I had to put out a very irresponsible tweet. Maybe many of you've seen it already. But what I said was that what I'm essentially doing now is call for near-term bottom tick here on the NASDAQ 100 futures. Okay. And by the way, yes, this is like I say in the tweet, like this is a very, like, I never do this. This is very stupid and irresponsible to put stuff like this out. And the reason I don't do this is because like bottom tick calls like this are purely luck. Okay. So I'm long luck is my call really at the end of the day. But what I'm saying is that the downside on NDX and Nikkei and all that has been driven by the yen this whole time, July 11th. Like shortly after the USDJPY data came out, okay? And that sharp downside move on dollar yen right here, this is the Ministry of Finance and their Yentervention, okay? And then after that, there are like these little kind of short bursts of yen strength or USDJPY downside. And that has been also the Ministry of Finance, not every single move that you see there. And I frankly don't know which ones are and which ones aren't. And also signaling like rate checking. But by and large, the move in the indices and equity indices has been like a systematically driven carry trade unwind, a buy covering exiting of short yen positions. Okay. And so what I'm actually doing is this is not like a NASDAQ call, especially on like fundamentals, obviously, or anything like that. This is a dollar yen 152 support will hold in the near term call. And by the way, in this case, near term is like day to days. Like normally I'd say days to weeks. I'm saying day to days. All right. Now, look at this. This is actual 152, right? Like not down to the exact tick, but dollar yen hits 152 and then reverses. So there is support there. But why in the hell should the NASDAQ do that as well? Like what fundamentally about the NASDAQ would explain that kind of price action that ties it to USDJPY or any JPY cross? Well, there isn't anything in fundamentally, but from market fundamentals, yeah, that makes sense because the move has been driven by and large this downside move has been driven by and large by yen short cover and yen strength. Okay. Now, my irresponsible tweet and all that aside, forget about my stupid call of whether or not like it's going to hold or not, right? What I'm saying definitively is that it is a key support level for dollar yen. And by identifying it as a support level at 152, what I'm saying is that if it bounces off of 152, then that could very well be the end to this sharp pullback in the NASDAQ and other indices alike. But what I'm also saying, therefore, is that if it breaks 152 meaningfully to the downside, I'm not talking about 150, 150 or whatever. Like, let's just call it breaks into like the 149 handle. Okay, so let's give it like a 2 yen cushion or so. Then not only are you going to see another leg of sharp dollar yen downside or yen accelerated upside, and it will be more accelerated than this move. Not only that, but that also would imply that the NASDAQ has much more plummeting left to do, much more falling left to do. Okay. So when I'm making this call, again, the call is just what side of the flip of a coin am I taking of whether or not the support holds or not. Okay. Don't worry about that. But listen to what I'm saying with regards to there is a resistance level at 152 on dollar yen that all of these other macro assets are heavily dependent upon. Okay. And so what happens with that resistance level and what view you want to take on that, that's totally up to you. Just acknowledge that there is a very critical moment, a very critical level that we are currently at right now. That's why I say that the yen is the CrowdStrike of global macro markets right now. Okay, and that's why it matters. So let's just get back into the slides that I had prepared before dollar yen interrupted all this with actually hitting 152 and bouncing off of it, and then my irresponsible tweet. So look, I actually had prepared all this. I was working on this yesterday night, or I guess this morning. Like it was past midnight Tokyo time, and it was during the U.S. trading session, the cash trading session on Wednesday, July 24th, as the indices were plummeting, as was dollar yen. And I was going to give this quick heads up sort of video. So these charts are from yesterday, but they still very much apply. In October of 2022, you have the second Yentervention of the year at USDJPY 152. Okay, and that was successful. It was successfully triggered this massive, not just yen short squeeze and short cover that self-perpetuated, but a massive cross-asset short squeeze and short cover. Okay, and then after that, and really for like the next year and a half, spot dollar yen 152 was a very formidable resistance level to the upside. You can see it right here. Like you can see in this chart, clearly there's this cap, this market self-imposed cap ceiling on USDJPY, moving above 152. Now, eventually, in late April, it does successfully break out from that 152 stubborn resistance level. And when it does, it shoots up very, very quickly, like almost a full 10 handles through 160, and then it gets intervened upon at the very end of April and then gets slammed back down. Okay. But also note, when it does get slammed back down in early May, where does it find support? At 152. All right. So what the hell does this have to do with the NASDAQ? Spot dollar yen, and here is the 152 resistance level from the October 2022 Yentervention. These are NDX futures overlaid on top, year to date. All right. Now just look at this chart. That is not the NDX moving to its own merit alone, if at all. Okay. That's NDX moving to dollar yen. And the reason that I can say that is because look at from the beginning of the year, where they both have this upside momentum till about April. And I just explained why 152 was a resistance level for dollar yen. Fine. But why is NDX also suddenly and simultaneously capping its upside momentum from the start of the year and plateauing at the exact same time and manner as when dollar yen does at 152? In other words, why does the NDX futures have an upside resistance of dollar yen 152? Doesn't make any sense fundamentally, unless you consider that the NDX upside all along from year to date was at the hands of USDJPY. And so if dollar yen pauses at 153 resistance or anywhere, well, so too does NDX, because NDX is at the mercy of what the yen is doing. Okay. And that you see there is that large effect of the yen carry trade that's been fueling NDX upside in 2024 via the selling of JPY. And so therefore, when that selling of JPY, when that unwinds or when that reverses and you get strength in JPY, well, you also get a reversal in these NDX longs. And that's why that downside is so very much correlated. Okay. Now I'll touch on the NISA flows later, but it's something that I've talked about countless times. I don't understand why the talking heads on financial media don't seem to acknowledge this at all in their framework. The markets, by and large, they're so very systematic. This is a very, very highly systematic flow driven market. In other words, it's not human beings making buy and sell decisions. That's that you're seeing being reflected in these charts. Okay. This is why you have very narrow market breadth, but it's also why you see massive, massive free market gaps up and down in single stocks upon US earnings releases. Okay. Because of the absence of human fund managers and human traders, human being activity in these markets outside of things like earnings. Most of those flows are just systematic and programmed. And so that's why when you get an earnings release, because the active fundamentally driven capital hasn't been actively participating until results come in, then they finally act. They act in unison. And that's when and why you get double-digit gaps up and down post earnings on massive volume, or for more or less inline results on earnings, even if it is slight miss or slight beat or a guidance that's slightly off or whatever. That does not justify plus or minus 1/5 or 1/4 of market cap immediately overnight from close to open. Is that how efficient markets price things and behave? Adding or subtracting in increments of 1/4 of market cap? No. So you have very narrow market breadth. You have these huge swings in not very huge earnings miscalculations or anything like that, or surprises, beats or misses. Either way, it's all reflective of the markets that are by and large just left alone and are just trading systematically. And it's systematic flows that correlate things like dollar yen and NASDAQ futures and things like that, especially markets that have macro markets that have liquid futures, because you have CTA flows and stuff like that. Okay. I wrote about that too recently. Okay. So here's the most recent past month of downside for both. Okay. So dollar yen tops at 162-ish, around that level, right? And then it's been dropping ever since. And it's now, basically 10 big figures down from there, from just the 11th of this month. It's really not that long ago. And a lot of that was due to Yenterventions. Obviously, that first big blast down, that was a Yentervention. But then you also have these kind of smaller mini interventions that are occurring. And this is what I'm talking about in terms of this thesis that I have, this shift in strategy of execution by the Ministry of Finances as it relates to the interventions, right? It's no more kind of trying to, whack the tennis ball the other way once it kind of spikes and just hitting it against momentum. They're now actually being proactive with hitting dollar yen further down alongside market momentum, right? And what they're trying to do is they're trying to prevent that smash down and then the recovery that comes very shortly thereafter. They want to they want to maintain it down so that traders exit their positions. And just to be clear, okay, when I say that there's Yentervention activity, yes, there is, okay, but that doesn't mean that it's the only activity either. Okay, the Yenterventions alone aren't moving the yen higher, nor are they meant to. Okay, they're meant to trigger markets to exit short positions in self-sustained momentum, just like from the intervention from October of 2022. Okay, but what's different in tactic for this time is that the interventions from the Ministry of Finance, they're now facilitating the sustaining of that momentum with these like mini interventions that are much more discreet rather than these giant blasts down from 5 big figures in like 30 minutes and then like quick recovery thereafter, like halfway back up by the next day type of thing, right? So they try to prevent that. And they're doing that by relentlessly keeping the momentum intact. And it's been working. Okay. Now I go into detail about, everything regarding this new intervention, this shift in the intervention execution tactic by the Ministry of Finance in a separate piece on my Substack that will be released. Okay, so let's go into what I've been flagging, which is dollar yen 152. Now I made these charts just yesterday, and already they're out. They're not updated, but whatever. We'll just keep using them anyway. Okay, so this is the same thing. This is dollar yen. This is Nasdaq. I'm using purple for Nasdaq right now. 152. Okay. Now at the time when I was making these charts, it looked like dollar yen was closing in fast on 152. And that's what I was trying to flag with these charts, and then it's already hit 152. And then subsequently bounce off of 152. So far, it looks like my gamble has been correct. Okay, now, contrary to what I just mentioned before, though, about how dollar yen blasts down through 152 and breaks, that support level and really falls, then the NASDAQ has like a lot more falling to do itself alongside. So that's actually not entirely as cut and dry as I was saying before. All right. And I want to point to this right here. All right. So I was saying how it was, 152 was a very formidable upside resistance level, and indeed it was. All right. And that even capped NDX futures, and indeed it did. But look at what happens when dollar yen actually does finally rip out and break out above 152 and starts to skyrocket upwards. Look at what happens to NDX futures. Not only doesn't keep up, but it actually falls. It trades directionally opposite. In fact, if I take the same chart, right, and I just flip USDJPY upside down, so I invert the chart. So now that white line, that dollar yen line, that's the direction of the yen. So if that's falling, that's the yen getting weaker. If that's going upwards, that's the yen getting stronger. Okay. So now that I've done it, I'll flip it visually this way and inverted the dollar yen chart. Now take a look at that 152 breakout, or I guess 152 breakdown, right? And then to have the intervention slam JPY back upwards. That window, that box right there. During this very strange time, this, half a month or so, the correlation of NDX and USDJPY still remained pretty tight, but it had completely flipped 180 degrees. And now it's just very tight, but it has a negative correlation, whereas previously it had a positive correlation. Okay. So that's a pretty insane thing. The fact that 152 getting broken still retained as a very high correlation between these two, but the polarity just absolutely flipped. And then once it got slammed back down, basically returned back to its pre-existing positive correlation and directional relationship. So all this is to once again say that this is an extremely systematically driven market. Okay, just rewatch the last 60 seconds again of what I just showed you in these charts. Correlations on your throughout, and then they flip from positive to negative, and then they flip back. Okay, do you think those are like footprints of human active managers that are actually doing this, that are correlating things perfectly like that? No, it's very systematic. This shorting of JPY